Hello and welcome to NDTV Profit. We're breaking into this special broadcast because of Kotak Mahindra Bank's results that have just come in. And what we're learning is the net profit figure is coming in close to 3,280 crore. This is as opposed to about a 3,497 crore estimate that NDTV Profit had. Gross NPA ratio slightly, marginally higher from 1.45% to about 1.48%. Similarly, as far as net NPA is concerned, from 0.31 to about 0.34%. So those are the quick changes that have happened in the numbers. I'll get in Sunny Agarwal of SBI Cap Securities to join us on this conversation. Sunny, welcome. What do you make of the first cut of these numbers?
Good afternoon and thanks for having me on the show. It seems like there is some minor stress on asset quality front, as we have seen some increase on gross NPA and net NPA, both in percentage term as well as absolute number. So need to get into more details how credit card, unsecured book as well as the PL personal loan has performed during the quarter. And at the same time, I would like to get into details of what has happened on basically NIM front. So I think NIM data is not yet out. So we need to compute that. So NIM again again there were two, three levers which were available for Kotak, wherein there were some reduction on saving account interest rate. The sweep FD rates were reduced. So to that extent, there was some lever. On the other hand, there was supposed to be pressure because of the reduction in unsecured contribution of unsecured book to the total loan book. So we need to delve into it. So do we have the latest presentation available now? Actually, I'm unable to see it.
But all we have at this point in time are the P&L figures that are out there. On a standalone basis, we understand last year there was a one-off, so obviously that's contributing to a profit drop. But again, that's not a fair comparison, I think, because that the sale of the insurance arm was adding to that number last year. But at 3,281 odd crore, net profit is still lower than the last quarter. Clearly, what you can see in terms of the operating profit, that is higher. So it seems that largely because of a provision hit, I'm assuming. Yes, that's right. So from about 900 odd crore worth of provisions in Q4, in Q1 you've had about 1,200 crore worth of provisions. I'm assuming this is coming in because of agri and microfinance portfolio, which are the two areas where the risk has been seen at Kotak, right?
Yes. So yes, you are right. I think I can just go through the P&L also.
Yeah.
So last quarter, that is quarter 4, we have seen 909 crore of provision, and this quarter that has jumped to close to 1,200 crore. So a significant jump as far as provision is concerned on year-over-year and Q-on-Q basis. So that can be one of the reasons wherein we have seen a pressure on profitability. Even in terms of operating PPOP before provision, so we can see a minor uptick on sequential basis as well as close to 7 to 8% YOY growth as far as operating profits are concerned.
Net interest income is up just about 6%. I mean, for a Q1, do you think that's a strong number? Sunny, could you hear me? I said that net interest income growth is about 6% year on year. So
no. If NII is 6% year-over-year growth, then I think that's a bit of sign of worry because
right.
I think that is far below the advances growth. So if I remember during the provisional update, the bank has said that their advances has grown 14% year-over-year.
Correct.
And against that, NII has increased by only 6%. Then definitely there is a pressure on significant pressure on NIM. So we need to get into detail actually. I mean segment-wise what has happened in each and every segment.
So Sunny, the press release has dropped now. Net interest margin seems to be about 4.65% for Q1. And in comparison to that, what you're seeing in the average total deposit is up about 13%. While advances are up about 14%. So, I mean, advances growth and deposit growth are not that bad, but clearly NII growth is not looking very strong. And what we are seeing is that unsecured retail advances have dropped to about 9.7% of total advances. So that's a clear sign of the bank deleveraging on its unsecured portfolio and trying to come up on the secured side, assuming that that is why there is an NII impact as well, because you're not really earning that much in terms of interest income.
Yeah, I mean, again, the same trend was visible during the previous quarter. But if I remember, during the last quarter, the management has alluded to the fact that going forward, this unsecured book can increase as a contribution of this unsecured book can increase going forward, as they were confident that things are looking pretty well. Apart from MFI, all the other unsecured portfolio, the stress was looking pretty well, and they were supposed to increase the contribution from that. That would have taken their NIM slightly, that would have made their NIM slightly better. But it seems that that's not the case. So, as you have seen in the other banks also, still worse is not behind for the unsecured book, whether it is personal loan, credit card, or on microfinance side. So, I think the same thing has also played out for Kotak.
Your CASA ratio is still at about 40.9%. Do you think that above 40% CASA is still looking good as far as private banks are concerned?
Yeah, I think that's a decent number, it seems, as far as CASA is concerned. But I would like to go through the minute detail when what has happened segment-wise, and this particular spike in provision that is related to some particular portfolio, or it is the stress has spread across to SME book business banking. So if you remember, business banking was one of the key growth drivers for Kotak as well as all the other banks. In case there is some sign of stress over there, then that can be a sign of worry for Kotak Bank also.
I wanted to get your sense about this Q1. So you've seen a spike in NPAs across large banks that have reported results. A lot of it is seasonal, but also, like, for example, on Axis Bank, the situation was different. There was because of some internal policy change that they have seen a sharp rise in NPAs. I wanted to get your sense about Q1. Is this looking better or worse or almost same as normal Q1s are?
No, again, I think one thing is pretty clear from the Q1 numbers that, as we were discussing earlier also, that the stress on unsecured book, whether it is microfinance, whether it is SME, whether it is on a consumer side, personal loan, there things have not, things are yet to improve. So maybe we may have to wait for one more quarter, that is Q2, wherein things will start looking good, as most of the banks have taken a cautious approach on this unsecured book. And they may go slow in terms of lending on this part, which is usually an high-yielding product. At the same time, the rate cut by RBI, so most like Kotak has got a 60% of its book linked to EBLR. So to that extent, there will be pressure on yield on advances also. At the same time, there are some levers also, like as the deposit rate, TD gets repriced gradually. And at the same time, saving account rate, we have already seen an immediate repricing. So to some extent, I believe that Q2 is a quarter where the NIM may start to bottoming out, and then coupled with bottoming out as far as stress on book is concerned. And then probably from Q3 onwards, we may see a gradual increment in NIM as well as improvement in asset quality. So it seems like Q2 will be a kind of muted for most of the bank going forward. And the things should start improving from Q3. So I think Kotak PPT has been uploaded. Just a minute, let me go to the details.
It seems that the investor presentation is also out. Taking a quick look at the net interest margin front, let me just pull that up. 4.65 versus 5.02. So that's a sharp dip on the net interest margin sequentially, close to about 40 odd basis points, or 37 basis points. So that's that big drop. Having said that, I think the CASA ratios also shrunk from 43% to 40.9%. That's not that worrying because a 40% CASA ratio still seems strong. ROA front, that's looking quite strong. I mean, if you exclude the gains that were there in Q1 of FY25, from 2.35%, 2.38%, ROA is down to about 1.94%. Any thoughts on that, Sunny?
Yeah, so again, it seems that, yes, as you rightly pointed out, the NIM is significantly under pressure. So it's 5.02% was in Q1 FY25, 4.65 in this quarter. So that's pretty much under pressure. Coming to cost to income, that seems to be okay. So there is no stress as far as the cost to income ratio is concerned. Just a minute.
If you, yeah. Sunny, stay with us. We also have Parag Thakkar, fund manager, head of fund manager at Fort Capital. Parag, welcome. I wanted to ask you about what you make of the first cut of these Kotak Mahindra Bank figures. I know the investor presentation has just dropped, so we only have access to the numbers sort of just a couple of minutes back. But what are you making of this?
Yeah, so basically, see, it was very clear because RBI had cut rates very aggressively and 100 bips actually in total. So between this quarter and the next quarter, every bank will see 25 to 30 bips in contraction, barring, say, a few like ICICI and HDFC of the world. So I think in Kotak, we have to hear on the call that how much of their book got, loan book got repriced. And maybe if they can say that Q2, the pressure will be lesser, while other banks have said that Q2, the pressure will be higher, NIM pressure, I'm saying, then it will be good. But otherwise, it looks like a very high number on the NIM pressure front. And asset quality, we'll have to hear. See, on Bajaj Finance also, we saw that, they pointed out MSME stress. So we'll have to hear from Kotak also on the call that whether they are seeing any stress. Of course, ICICI and HDFC, there was no stress at all. But it always continues to be the case. So we'll have to hear from Kotak what they have to say about the asset quality. Otherwise, asset quality, I don't expect any big blowout from Kotak like we saw from one private sector bank. But NIM pressure, yes, it is there, but it was expected, but it is higher than expected.
What do you make of the provision figure? There again, there's a sharp jump, 109% year on year. I mean, that's more than doubling of the provisioning figure there.
Yeah, so I'm saying, see, HDFC also created buffer, right?
Yeah.
By doing a contingent and floating provision. Of course, they had a one-time gain, so they offset it. So provisioning figure to increase in this environment when economy is a little bit slow might be just a prudent step also. So that is why I'm saying we'll have to hear the call. And it is not as big as jump as Axis Bank was. So I'm not saying that, for Kotak, I don't expect things to blow out completely. Let's hear on the call what they have to say on the asset quality front.
Let me go back to Sunny. Sunny, fresh slippages for this quarter is about 1,812 crore. That's the number that's there in the presentation, compared to about 1,358 crore in Q1 last year and about 1,488 crore in Q4. And Q4 was supposed to be the worst of quarter because of the big microfinance impact that came in. So now your slippages are even higher. That asset quality pressure that we spoke about earlier, that seems to be playing out quite a bit for them.
Yeah, I mean, yes, definitely. I think slippages have increased even Q on Q basis. So that's a little bit sign of worry. And anyway, I was going through the overall breakup of loan book. So we have seen a kind of degrowth in of 12% year over year on credit card front. Retail micro credit has gone down by 43% YOY. And others is close to 19%. So again, pretty much in line with expected, where the microfinance book is being scaled down significantly. So there seems the worry is yet to get over. Credit card book, I am surprised. I mean, despite of lifting of embargo by RBI, we have seen a kind of a degrowth even on Q basis on credit card portfolio. So need to hear from management on what's happening over there.
That's right. The credit card book is down about 12% year on year, from 13,420 crores down to about 12,900, a little close to 13,000 crore. Parag, I wanted to ask you this one question. So if you were to look at the retail breakup of books, retail microcredit going down 43% is no surprise at all. But credit card, despite them saying that they're going to step it up, and it's been now, this is the second quarter of them having a free rein on the credit card book. There again, a dip in the portfolio, a lot of risk aversion. Is that how we should read this?
Yeah, I think in my view, Kotak is a prudent bank, and like Bajaj, since Bajaj Finance also pointed out, the economy has not done that well, and that is what is being reflected. And so they might say that they have purposefully and intentionally slowed down because they were not seeing the right signs. Even SBI card result, if you see, it was also not that great. So because the overall economy, as the customers are over leveraged mostly, and economy was slow, I think Kotak might have felt that it is prudent enough to apply brakes and then grow when the things are better, maybe after festive season. So I think, see, in HDFC or ICICI or Kotak's case, I feel that, or some other banks like Federal and City Union, I feel that the intent is always to run it prudently and take only a risk which is calibrated. So I think that is the part on that. So I say that result market will not like, in my view. Let's hear them on the call. But whatever is required for the business, they get it done. That is my view on Kotak.
Got that, Parag. Thank you so much. Thank you, Parag Thakkar and Sunny Agarwal, for joining us on short notice and taking us through the numbers, even though numbers were still pouring in as we were discussing things.